AMD shareholders, we have some more big news out here today. So AMD, another nice upward move. The stock is now up 170% from those April lows. Unbelievable move. A lot of big movers out there today. SoFi shareholders, congrats to anyone out there that's watching this as a SoFi shareholder. PayPal was up very nicely here today, up about 4.5%. Estee Lauder was up big. Celsius continues to run up another 3+% here today, okay? So big news came out in regards to AMD on the stock side, okay? And so I want to go ahead and react to this and explain what this means for AMD's stock price moving forward. That's a very important part we got to talk about because this is very impactful, okay? After we get done going through that, I actually want to react to two bearish clips here. One is this one, AI valuations are in a bubble. Looking forward to reacting to that, sharing my opinion and perspectives there. This one's in regards to Oracle, which Oracle was red hot stock, and it has just gone ice cold now at this point in time. Oracle shares fall on report the company is struggling to make money renting out its NVIDIA chips. So since Oracle made such an insane move and given back so much of it now, I want to talk about if something like this could happen with AMD or if that's unrealistic. And, you know, moral of the story is Oracle has a very different situation going on there, okay? Ed Denny went on CNBC, spoke about valuations being high and where he sees the market going from here. Tom Lee went on CNBC, talked about this being the most hated V-shaped rally, and looking forward to sharing my perspective and opinions on where this market's headed based upon what Tom Lee says here. And then the last video up here is, this one was phenomenal. This was way better. Like AMD CEO and the OpenAI executive they went on CNBC yesterday, spoke about things, but this Bloomberg one, way better details on what's going on here. I got to explain everything going on there. Some great questions on why did OpenAI go with AMD in regards to this matter, right? Where are things going to get built at, right? How is AMD this confident in OpenAI to do a deal of this size and all those sorts of things? So yeah, busy action-packed video here today, folks. We got a lot of things to go through. I posted this on my X page here. I said, this guy has been posting a lot of pro AMD videos nonstop the past 9 months. I think he likes the stock, right? And yeah, there's definitely a lot, right? This one's on the main channel 9 months ago, buy AMD stock and don't stop. There's one 8 months ago, keep buying AMD and don't stop. This one, buy AMD nonstop. AMD just changed everything. AMD will never be the same. Biggest development in 10 years. AMD stock, I'm all in. Here's why. I mean, yeah, it's been a fun ride, right? And you know it's big times with AMD because I never make back-to-back videos on a stock, and I'm doing that here today, okay? One thing only I need from you guys, if you could please just smash that like button. If you could just make that thumbs up button glow, that means the world to me. Additionally, if you want to see more of my videos in the future, make sure you're subscribed to the channel. If you're subscribed here, there's a higher probability YouTube will show my videos in the future. If you're not subscribed, there's a lower probability. So if you enjoy my content, you want to continue to see this content in future weeks, months, and years, make sure to subscribe to the channel, okay? Alrighty, guys, so let's go ahead and let's react to this first clip, and then we'll go from here, and I'll explain why this is so big for the stock price of AMD and where we're headed here.
Vivek Arya, Bank of America senior semiconductor analyst. He's bullish on this deal and just raised his price target for AMD to $250 from $200. Vivek, thanks so much for...
He raised his price target to $250? Listen, when do I think $250 could happen? I think $250 could happen in within 60 days. Like, obviously, I'm not going to make a bet. So I believe AMD will be over $250 within 60 trading days, right? Few things to factor in. One, if we have a massive market correction in the next 60 days, which is possible, that's what we had in 2018, guess what? It's going to be hard for AMD to go 250 plus if the whole market's in a major correction, right? Not impossible, but that's going to be brutally hard. The second part to remember is just because I believe AMD is likely going there within the next 60 days does not mean I'm going to place directional bets, as in like short-term call options, because I'm like, I think it's going to this price because it has so much momentum. We got blah, 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 blah. No. I'm not going to risk capital just on that. I understand there's other people that want to play that game, right? And when you get it right, it's fun. But that's a form of gambling to me. I'm not interested in that. I like to make investments for the long term on companies, and then I'll hedge my portfolios for a little bit of protection here and there. I keep it simple. I don't need to go off and do all this stuff, right? Like, that is what it is. You know, you could say I could have made way more money buying call options than AMD the last 6 to 9 months than just buying shares straight up. 100%. That's true, right? But also, what if AMD didn't go my way? Then I'm out massive quantities of money. Like, let's say AMD was just flat over the last 6 to 9 months, right? I would have lost everything on my call options, right? Versus like, at least I would still have all of my money in my shares I'd bought, right? So, there's a tremendous amount of risk that comes along with the strategy like
joining us. So what do you make of this deal? And especially what do you make of the concerns that this sort of increases the circularity between OpenAI and all of its vendors and the relationships between all these companies kind of financing each other?
Sure. Good morning. I think before we talk about the suppliers, it's important to understand that OpenAI is eating computing power like Pac-Man. They have 800 million weekly active users, probably getting to 1 billion users by the end of the year. And this is within 3 years of them forming. It took Facebook 8 years to get to 1 billion users. And every one of the users that OpenAI has on their network is consuming tremendous amount of tokens and computing capacity. So the company has to build out a lot of infrastructure, which it is doing with the help of cloud service providers. And for that, it needs to partner with these leading semiconductor companies. Today, NVIDIA is the incumbent. OpenAI has signed deals with Broadcom, and now it has signed this deal with AMD. But it's also important to realize, second point, that OpenAI is going to be one of the many ecosystems that develops in this AI industry, right? There's going to be an ecosystem developed around Meta or Amazon or Google, right? The many different neoclouds that are forming. So this is going to be a broad, diversified industry with chip makers participating, which is why we are not as worried about the circularity of this, because if you look at the total of the deals that OpenAI has signed with NVIDIA and AMD, they will probably end up being less than 5 or 10% of the overall deployment. So no, we are incredibly bullish about this build out. And I think companies like NVIDIA, Broadcom, AMD, and others are very well positioned to take advantage of it.
Yeah, and the thing to understand about this whole story is a lot of companies are going to make money a lot of different ways from this, right? For instance, Meta has their way of making money, which their way of making money is, they have a lot of opportunity with the llama models, right? But additionally, like they're already starting to monetize heavily based upon AI showing you content you might be more interested in, right? Advertisers getting better bang for their bucks by using AI, right? And that'll help Meta make more money, right? Obviously, OpenAI has their strategies around their chat feature, right, which we all know, which is massive and continues to build out, and they want to get more into photos and images, and there's a lot of people playing in that space as well, right? Every company is going to have a different strategy here, right? Google has its strategy, which is probably going to be through commerce, through advertising over time, right? And they'll probably be a direct, I would say, competitor to ChatGPT, right? Like Amazon's going to do it through the cloud and through AWS. Like everybody's going to have their own strategy. Some people are going to sell a product, some people are going to sell a service, some people are going to have a cloud, some people are going to sell chips. So it's a huge industry. We know it's booming. We know people are actually using it in a substantial way, and it's here. Now, why is this so big for AMD's stock price? What this Wall Streeter, here is talking about, right? Listen, when we talk about moving up a stock price significantly, like one of the things that's bothered me in regards to AMD that hasn't bothered me in regards to, like, it's created a tremendous buying opportunity, but I'm like, holy smokes, these Wall Streeters don't understand what actually is going on with AMD and how well this company's positioned for the next 5 years, essentially, right? They're looking at the last 5 and they think like, oh, you know what I mean? Like, NVIDIA's been eating their lunch. And I'm looking at the acquisitions AMD's done over the last couple of years. I'm looking at their chips, right? The 350 in the market and thinking about where the 400 series goes. And everything's positioned AMD phenomenal for the next several years. But Wall Street has not even been on to this game. Like they have just been asleep at the wheel, like not paying attention to what's going on beneath the surface in regards to AMD. So now the Wall Streeters are finally catching up to the story. They're finally, like, this deal was finally the one where Wall Street said, you know what? I think Lisa Su and the team might actually be up to something here, right? If the most impactful, important AI company in the world says, we're going all in on your chips, I don't think it's an accident that they aren't doing AMD any favors. It's because, like, they believe AMD's got a phenomenal product in the market and they're going to want to buy massive quantities of AMD's, products over the next many years. So Wall Street's finally catching up to this, which means price target raises. It means they're going to get more and more of their clients into it, right? that's like it's a whole game to play out here, and so AMD can continue to see momentum for quite a long time.
The strategy, to your point, does appear to be as much a land grab as it is about a financial decision. And your point about Meta and the other ecosystems and the other companies competing in AI. Do you think OpenAI has, with all these deals, really made it harder for these other companies to get compute and to get the gigabytes they're going to need for all the power and all the compute power?
Sure. So I do think that the constraint in this industry is not going to be chips. I think it is going to be power. It is going to be the build out of data centers. So I would agree with you there. But many of the companies that are competing against OpenAI, these are public companies. If you look at their capex today, it is still only 70 to 80% of their operating cash flows. So they're very well positioned to fund a lot of their deployment through operating cash flows. Capex intensity is much higher. Used to be 10 to 15%. Now it's closer to 25%. But their cash flow from operations is over 30%. So they're well able to fund this. OpenAI does have to go and look at private sources to fund its build out. But what we find very exciting and fascinating about what's going on in the industry is that OpenAI is the most disruptive of these entities. So as OpenAI goes and disrupts or has the potential to disrupt business models, whether it's in social or search or e-commerce or shopping or other areas, I think that really motivates, it acts as a force multiplier to make others accelerate their deployments, which, as I mentioned, is incredibly positive for the semiconductor industry.
Yeah, 100%. And, AMD, I think a big focus of theirs will be on, obviously undercutting NVIDIA's pricing, giving a chip that's, just as good as top line NVIDIA chips, right? But undercutting as far as price goes. And then additionally, I think they're going to continue to really focus on how much power is needed for these chips and trying to make that as, let's call it, use as little power as feasible in regards to these chips, which is also another huge cost saving for these companies that are going to be building out these massive infrastructure projects, right? So now keep in mind, power is going to be a strain for a while, and that's going to be what that's going to be, right? But I think they'll figure it out over time. And I think one of the big ways you could figure it out is, I think these chip companies got to continue to innovate. When I say chip companies, I'm really talking about NVIDIA and AMD, right? Continue to make these products in a way that uses as little energy as possible, right? Which is something they can do over time. There's no doubt about that, right? They got incredible teams there, right, of very intelligent individuals, and they'll figure it out. Before we get into all these other videos, if you're an AMD shareholder and you want to join my private stock group, we've got massive amounts of AMD shareholders in my private stock group. These are steel membership cards we send you in the mail. To join there, that will be the pinned comment down there here today. Click on that, fill out a form, see if we can get you access in there. It's much more than just a Discord chat with a ton of AMD shareholders and other shareholders of other companies. You also get access to my full suite of premium courses, access to 1000xstocks.com, exclusive weekly videos teaching you this stuff, and access to my almost $4 million Fidelity account to see the stocks I'm buying and selling on a weekly basis. That will be pinned comment down there.
Now, welcome. It's good to have you.
Sarah, it's great to be here. Hi, Carl. Thanks for having me.
So all of these deals, particularly around OpenAI, are they distorting the private market?
I don't think so. I mean, isn't it an astonishing amount of money?
It's mind-blowing.
And how quickly it is moving. Now, for enterprise software, which is the area that we focus on, that $1.5 trillion economy, this is a huge tailwind. All these investments is becoming clearer and clearer to the market, to customers, and to investors that this is a big tailwind for those companies. So it's a big beneficiary of these enormous investments.
So you've been through cycles. Been through the last .com cycle. People are drawing parallels to that just because the size of the numbers and the deals and now the high valuations. Do you see any comparison?
Thank you for mentioning the .com bubble burst. We, investing-wise and operating-wise, we're a product of that environment. That's when we learned to buy a software company cheap, when we learned to cut costs, when we learned how to operate. And it was wild. I was young in San Francisco in those days, and all the bars closed down and all the restaurants closed down all of a sudden. I can tell you there is a parallel, which is valuations. Valuations in AI are at a bubble. You cannot.
Public or private?
Both. You cannot value a $50 million ARR company at $10 billion. Think about how public investors and great investors think about companies. That company's going to have to produce $1 billion in free cash flow to double an investor's money ultimately. Even if the product is right, even if the market's right, that's a tall order managerially. Now, there's a big difference between the dot-com bubble burst and what's going on now. Now you have some really big companies and some big balance sheets and healthy balance sheets financing this activity, which was different than what happened roughly 25 years ago.
So what do you do with all that? What are you doing?
Okay, before we go further here, because that's obviously a big statement he mentions about private valuations being in a bubble, public valuations being in a bubble here, okay. Here's what I'll say about that. Is it possible, let's say OpenAI, I believe their valuation just got, I believe they just received a $500 billion valuation, $500 billion, right? Could that be a bubble? Could be. But you see, I don't say, yeah, it's a bubble. That's crazy. You know why I don't? Because they said Facebook was probably a bubble at $40 billion market cap. Facebook's now like a $2 trillion market cap, right? When Zuckerberg bought Instagram for $1 billion, people say, that's insane. What a bubble we have going on with these apps. Like, come on, $1 billion for this little photo sharing app? Like, are we mad? You know, if Instagram was a standalone company, it would probably have a valuation of somewhere between $200 and $400 billion on it today. So whenever you get into this situation and people say, it's a bubble, this is a bubble, it could be, or maybe just maybe those companies are going to grow into it. Now, the issue is there's some companies that, yeah, they're going to have huge valuations on them right now, and they're not going to be the ones. They might have a $10 billion valuation on it now. 5 years from now, they have $1 billion valuation on it, right? 90% value lost. That's very possible. That happens every single cycle. But to chalk them all up as these are all crazy, the other thing I'll push back on is public valuations and, bubble times and those sorts of things. Listen, I went through the numbers. I believe it was in AMD's video yesterday because we reacted to some other stuff. And I went through like Meta, Google. A lot of these companies, they're not in bubble territory at all in regards to their stock prices, in regards to their valuations on how you value these companies. So, Palantir, I could say, well, shoot, if those Palantir growth rates start to go down and decelerate, then we got a huge bubble in Palantir, for instance, right? And there's certain of those stocks. If Tesla doesn't, do what it's supposed to do over the next few years, huge bubble. Like there's certain stocks you can say, yeah, that one's a bubble, but the market in general, even Nvidia, like Nvidia should be able to double their EPS in the next year or two, which puts them at likely a 2-year forward P, we can say, in the 20s. So now if Nvidia's revenues and earnings per share crash, let's say in 27, 28, then you say, yeah, Nvidia's a crazy bubble, right? Sure, that's totally fair. But if Nvidia just keeps slowly growing or even is stagnant for a couple of years at a 20 forward P or somewhere in the 20s, that's not crazy. So that's where you got to really run the math and you're like, okay, so I think there's too many people like just want it to be a bubble because they haven't actually been investing in many of these companies and making this big money. They haven't actually been on the side of Nvidia or many of these other stocks that have been benefiting huge, right? Or an AMD, Palantir, and they look and they see investors making so much money, and so humans do human things and they start feeling envious, jealous, and those sorts of things, right? And they say it's a bubble. That's crazy, man, because you're making so much money. And all along, it's like, yeah, you can call it that, but at the end of the day, if the revenues continue to grow substantially, if the profits continue to grow, and there's not a crazy forward P on something, then no, you can't really say it's a bubble. Like, could OpenAI be a $5 trillion company 10 years from now? It's possible. Like, maybe they aren't, but if they're $500 billion today and they're $5 trillion 10 years from now or 15 years from now, we'll look back and be like, gosh, it was so cheap, right? But they were calling it a bubble back then. Something to keep in mind.
So what we do, look, the opportunity in private equity, and for us specifically, to transform $1 billion software company, it's bigger than it's ever been. And then the tailwinds that those companies have with AI, think about it. You're selling your customer an important solution, a workflow solution, a system of record, something that's deeply embedded in that customer's process. And now with AI, you have so much more to sell them. agentic solutions, an easier way for the customer to engage with your product. That is a big, new, exciting tailwind for the industry. And a few months ago, the market in software stocks went down. And partly there were concerns. Is AI going to be a threat to software? Is it a benefit to software? Once again, it's becoming clearer and clearer that it's a big tailwind for software.
Really? So the death of SaaS, it was over.
And just, think about how companies can expand during this time, or the economy can expand during a time like this, right? We know OpenAI has massive user base, right, through ChatGPT. Listen, now they're going to integrate like Shopify, for instance, right? And Shopify is going to be able to start integrating Shopify stores in there and products and things like that, right? Huge opportunity for Shopify over the next few years. Like, this is an untapped opportunity. That's a brand new opportunity to Shopify. Shopify should have made $0 from, this service over time. Now they're going to be naturally integrated in. What do you think something like this is going to mean for Shopify over the next number of years? My guess is very good things. It's probably going to be massive increases in its business. That's not even counting all the increase. Shopify grows at like a 20% plus clip a year in and year out as it is. Now you got this OpenAI opportunity for Shopify in tapping that user base. That's a huge opportunity for Shopify to expand their business dramatically. Not a small amount, but dramatically. And then those Shopify sellers, people that use Shopify stores, they got a huge opportunity ahead of themselves as well to expand their likely small businesses, because a lot of those folks that have Shopify stores are small businesses or maybe mid-sized businesses, right? So, these are all things to kind of keep in mind here. And, no different than Meta, through Facebook and Instagram. Guess what? Companies, small business owners, medium-sized business owners are able to make so much more money because of Meta, because of Facebook, because of Instagram. They're able to run ads and then sell products and services and things like that. And, if that didn't exist, like, you just wouldn't have that opportunity. The bottom line is, if you get massive amounts of people funneled all in one area, you're going to have an incredible opportunity. Like, if we had 800 million people all in one area, right? Imagine the opportunity to sell those 800 million people something. You know what I mean? Like, it's just crazy. So, there's going to be a lot of economic expansion for a lot of, and I would say for anybody that's watching this, it's an entrepreneur or a business owner, like, there's going to be a lot of opportunities. You just got to pounce on these as you see them over the next few years.
Exaggerated.
They also said that after the dot-com bubble burst. I remember that like yesterday. I had one of my partners show up in my office and say, are we going to do any more software deals? I read this article that this is over. Remember, there was a Y2K boom and everybody buying excess software. And the software industry is just, together with AI, is going to provide a new growth curve to it.
When people look at moving from a sales cycle that relies more on debt, right? Or when free cash flow begins to go negative in some circles, is that a reason to question the durability of the cycle?
Look, it is so hard to predict cycles because it depends on investors' optimism and their attitude towards taking risk. We are not a subscriber to any money-losing company. At the end of the day, profitability and growth have to go together. It means that the company's making the right investment choices and that they have an organization that's well set up so that they don't depend on the outside for constant growth and promoting their company that way.
But are there portfolio companies of yours that could be disrupted by AI? For instance, I know you've invested in call center companies, and everyone says call centers are at the top of the list on those that could be disintermediated by AI.
It is a contrarian bet, isn't it?
That you're buying, and you're merging two of your call centers.
I think.
Yeah. Oh, so Oracle. So I was showing Oracle here. Since those highs it reached, a little less than a month ago, stock's down about 17%. So obviously it's been a harder space. Let's get into this.
A little while ago, these shares took a dip by about 5%. The information is out with a story today, which says the following. I'm quoting directly from this story, and this is the reason why the stock is lower. Internal documents show the fast-growing cloud business has had razor-thin gross profit margins in the past year or so, lower than what many equity analysts have estimated. That could raise questions about whether the AI cloud expansions undertaken by Oracle and its rivals will affect profitability and sustain investors' expectations. So this really speaks to what you're talking about. But here we have, according to the information, and we're continuing to work on this, and we'll try and get you more in just a little bit. Nebius is down on this. You're looking at related names. really at a time where we are, as an investor class, sort of really trying to get an idea where we are. Whether there's a bubble, whether there's been too much spend, whether there's been too much speculation on what the spend will result in. And at least this story right now about Oracle is sending those shares lower. There's CoreWeave, which took a move lower on that as well. Josh, I didn't mean to interrupt you, but I don't want to sit on that as we watch that stock go down.
I appreciate you bringing that into the conversation, because that is exactly what it looks like when some air is let out of these types of bubbles. And the main point that I wanted to make, and I'll make it right now very briefly, so I know we have a lot to get to, is that not every bubble ends in a 2000 to 2002 style secular bear market that takes the S&P down 57%. That's not how most of the time these things end. Most of the time, you'll just see certain names blow up. You'll see valuations contract. You'll see a couple of years of sluggish share price growth as we digest some of the excess. It doesn't always have to be the Nasdaq down 85%. People think there's this binary thing where either the market triples or gets cut in half. And most of market history says otherwise. It's okay if certain people are paying certain high multiples for certain stocks, and then that ends. It doesn't mean all of us have to go through Great Depression Part 2. There's room to say a lot of this activity is justified, while you can also say...
So before we go further here, we'll go into Ed Yarndeni next here. You know, in regards to a couple of important points for Oracle. One is, you know, they could make a strong argument that, yeah, margins are crap right now. We're not making any money, but margins will pick up over the coming years. And I think that's probably true. But with that being said, their margins sound like they're so bad for this business right now. I mean, you know, you could kind of view it as they're only going to get better from here. So that's fair. Now, next question is, could something like this happen with AMD, right? Where they're in a situation where they're making bad margins or something? The answer is absolutely not. This is a whole different situation. When you're somebody like an AMD and you sell chips, right? AMD is going to see massive margin acceleration for the next several years. And that's on a gross margin front, that's on a net margin front. And that's a whole different situation than Oracle and what they're having to deal with. When it comes to AMD, basically they're going to be able to charge, you know, $15,000, maybe even $20,000 plus, you know, per chipset they're selling out there, essentially, right? Which, you know, when we're talking about the amount of chips and GPUs like AMD is going to be selling, it's going to be, you know, obviously massive quantities. And so is AMD going to sell these chips at razor thin margins? The answer is absolutely not. And at least as Suze already said, this is going to be extremely, you know, accretive to the business. Like, no, that's just not happening. And NVIDIA charges such ridiculous prices that AMD can still undercut them and still make the best margins AMD's ever seen in the company's history. So keep that in mind, folks. So very different situation than obviously what Oracle's dealing with. And Oracle, you know, it's a stock I look at sometimes, and I've thought about buying it many times, but a couple things scare me away. One is they were involved in some sketchy stuff back in the tech bubble days. I don't want to get into all that. If you want to look into it, you can. Two, the balance sheet on Oracle's always been bad. It's a bad balance sheet in my personal opinion. Like, you know, for the big tech companies, I think it's arguably the worst balance sheet of any big tech company out there. And three, you know, they talk so much big game all the time about, oh, we're going to do these big numbers in the future. And then like their quarterly results come out and you look at the growth rates and you're like, how do you guys keep talking about all this money you're going to make and look at your growth rates? Like, what is going on here, right? Ed Yarndeni.
At Post 9, it's good to see you.
My pleasure.
On that issue, you say we're not seeing a bubble, but rather a bubble in bubble fears.
Well, right now we got a bubble in bubble fears, but there are clearly elements of a bubble.
I mean, is he not speaking facts there? I mean, that is kind of crazy because with how much bubble talk I hear, I'm like, maybe there's a bubble in bubble talk. I mean, it's just like literally like, you know, I have CNBC on in the background all the time, right? Or Bloomberg, and my gosh, the amount of times a bubble. I got people texting me left and right, you know, friends or family members, whoever, like, oh, you know, we in a bubble, you know, in regards to this AI thing, like, you know, holy smokes. Oh, I'm thinking about doing this. Oh, I'm thinking about, you know, selling out of the market. Oh, I'm thinking about going short stocks. Oh, I'm thinking about buying put options. I mean, I get info like on a daily basis. Like, I'm like, holy smokes, man. And the craziest part is usually when you're in a bubble, no one's talking about it. That's the crazy part, right? Like, it's not like before the tech bubble blew up, it's not like everybody was out there and their grandmas all saying, we're in a bubble, short the NASDAQ, short all these tech stocks. No, that wasn't going on. Before the great financial crisis, blew up, obviously, it's not like everybody was like, oh my gosh, we're in a massive bubble in regards to real estate prices. Now we look back and we're like, oh yeah, that was an issue, like, in those sorts of things. But at the time, no one said that, and if you did, you were Michael Burry and you got books and movies made about you, right?
A real bubble. I mean, the forward PE of the S&P 500 is about 23 right now. And back during the tech bubble of the late 1990s, early 2000s, we got to 25. The Buffett ratio is at an all-time record high. So valuation is definitely high. But we've also had some really remarkably strong earnings. And I think that that's what's going to continue to drive the market and maybe keep valuations up here. I think the market's discounting a very resilient economy.
Does a possible bubble not...
Yeah, the thing to keep in mind, the top of the market now versus, let's say, the tech bubble days. He talks about forward P at 25-ish in the tech bubble days. We're at a 23, right? You got to understand the companies at the top of the market now are far stronger companies on every front you want to look at. Dominant market position. We can talk about revenue growth. We can talk about earnings per share growth. We can talk about efficiency of the business models. We can talk about revenue per employee. We can talk about profit per employee. We can talk about balance sheet. We can talk about income statement. We can talk about cash flow. Compare the strongest companies now versus the strongest companies in 1999. And it's a night and day difference. It's not even close. They're not even in the same ballpark. And so that's just something to keep in mind here. The top of the market that really, drives your valuations up, it's way stronger than it was back in the tech bubble days, right? And anything tech related that went up like crazy back then was extremely speculative. Is Meta a speculative stock? I hope everybody would say no, right? I mean, sure, if everybody stopped using Facebook and Instagram and WhatsApp around the world, then it's speculative. But that ain't happening. Amazon is Amazon a speculative stock? Is everybody going to magically stop using AWS and Amazon? And no, okay. Google, no. Like, you can go through these companies, they're not speculative. And so, it's a strong argument to make that, valuation deserves to be higher because the strongest companies in the world, the ones that drive the market, also have a phenomenal growth rates.
Even matter right now because earnings are good. People are just going to play the hand they're dealt for now, worry about everything else later.
I think you focus on...
Heck, even look at NVIDIA, the strongest, the biggest market cap in the world. I mean, look at that. Is that not one of the strongest companies you've ever seen? Compare NVIDIA versus whatever the biggest company in the world was in 1999 or 2000 when the tech bubble went. They're not even on the same stratosphere, right? NVIDIA's got every single one of the strongest companies in the world is their customer, right? And we can say NVIDIA has income statements, balance sheets, and cash flows that are incredible. Growth rates are incredible, right? A CEO that's as proven as a CEO as you can possibly get in the world. So, it doesn't matter which way you boil it down. It's just, these companies are just a beast.
And the fundamentals of companies, and most of the fundamentals are hanging in there remarkably well. Profit margins have been remarkably high in the face of tariffs, for example. Corporate managements have really done an astounding job of kind of dealing with Washington. People look at the headlines and worry about how Washington is impacting the economy. I look at the other way. Look how well we're doing despite Washington.
I want you to listen to what Paul Tudor Jones said this morning on Squawk Box, trying to assess for himself whether history is repeating itself or rhyming or whatever it's doing about 99 and the tech bubble. Listen.
Feels exactly like 1999. I don't know whether we'll actually replay it exactly, but I think all the ingredients are in place. And certainly from a trading standpoint, you have to position yourself like it's October 99. I don't see why you would do anything but that. And remember, the Nasdaq doubled between the first week of October 99 and March of 2000. So if it looks like a duck and quacks like a duck, it's probably not a chicken, right?
The place I'll push back against Paul Tudor Jones here in regards to comparing, no one talks about this. Literally, what I'm about to talk about, no one talks about this. Okay, internet, Huge bubble, late 90s, right? Everybody's excited. Oh, everybody's going to use the internet. You know, they're all going to be searching stuff and buying stuff and doing all this stuff on the internet, right? Here's the issue with the internet versus what's going on right now. No one will talk to you about this. You're only going to hear it here. As somebody that grew up and was a kid in the late 90s, listen, not all households could even get internet. You know why? Because in order to get internet, your parents, or you, if you were older at that time, had to go buy a computer, a very highly priced computer. Guess what? Most people didn't have the money to buy a computer. Also, people were like, why do I really need that? Right? Then you had to go buy internet service for it as well, which I can't remember how much AOL was back then, right? That was a big provider. It might have been $19.99 a month or $9.99 or $29.99, whatever amount it was, okay? And it worked horrible. It worked awful. You also had to have a phone line connected. Not everybody had a phone line connected, right? The big difference between this, what we're going through now, is everybody can use AI right now. Because basically everybody has access to the internet nowadays, right? Almost everybody has access to, like, everybody's either got computers in the house or smartphones in the house. It doesn't matter if you're you could be in an area with poverty, right? Everybody's still got a smartphone with internet right in their pocket. Even in a poverty area of the United States of America, every single middle-class household, so I would say, maybe if they're Amish or something, but basically every single household in the United States of America all has a bunch of internet-enabled devices, which means you can use AI right now. Everybody can use it right now. That was very different than the internet age. The internet age was a slower build out because people had to go spend $1,000 plus on a PC, if not $2,000. And then they had to pay for internet and figure out how all this stuff works. Like, it doesn't take rocket science to go to ChatGPT right now, or go to Google Gemini, or go on X and use Grok. Like, anybody can do it right now. Right now. That's the big difference. And that's why this wave is taking off so much quicker than the internet. The internet was like a pain. You had to sell people that, the internet's this awesome thing, so go buy a $1,000, $2,000, $3,000 PC. Then go pay for internet for that PC, right? And then still have a horrible, horrible product experience.
That's so ATJ. Bad. In other words, he's saying it explicitly.
Yeah.
You still have to position like we're going to have this massive move in the market. Is that how you feel?
Yeah, I feel as though we already had sort of a look at what this could be, and that was at the beginning of the year. Remember, the stock market was back then around 22 forward PE, and then DeepSeek came out of nowhere in January, and all of the AI stocks got whacked. But then the companies reported that they were going to continue to spend money and that everything was just fine, and the market made a V-shaped recovery. So, if we have a correction, it'll be a buying opportunity just the way it was at the beginning of the year.
But the amount of money that these companies are spending is so ginormous now relative to what was announced even back when you're talking about. You have conversation about so-called circular deals.
Yeah.
I thought it was interesting. Stacy Rasgon, right? He's a star analyst, top chip name on Wall Street, said of Sam Altman, and he's looking at the deal today with AMD, says Sam Altman has the ability, I think, to either crash the global economy for a decade or take us to the promised land. We're not sure of which. What do you make of that?
Well, I think sometimes Sam Altman gets a little bit hyper about where this is all going. He's described his latest version of ChatGPT as like having a PhD professor working for you, and it's not quite that good. AI also stands for stands for the fact that it's artificial, but it's not intelligent. It's a probabilistic model, and I think it's very, very good at some routine tasks, and it's already being used, I think, to increase productivity. But look, I use it all the time as a research assistant, but I don't trust it. I always wind up checking it because it makes mistakes.
But are we in an either-or world when it comes to all this? It's either going to crash the global economy for a decade, all of this money that's going to be going towards nothing, like was promised, or we're going to in fact get to the promised land.
I mean, it's not going toward nothing, right? Like, we're already seeing companies build out substantial revenues, right? We're already seeing massive amounts of users use these products. So it's not, you can't say it's going toward nothing. Like, it's already in the real world actually being a success, right? All right, Tom Lee.
Seem to be shrugging off the shutdown, valuation concerns. What do you think is going on? Why do investors just continue to feel confidence?
Well, Frank, I think there's two underlying fundamental drivers for the economy. One is that we know there's a tremendous CapEx tailwind from AI.
Yep.
And the second is that the Fed's been on hold for 9 months, and it's kept the ISM below 50 for now 31 months, and the Fed's dovish. So that's the rest of the economy getting basically a lifeline. Those are going to be powerful tailwinds that even a government shutdown doesn't really change the story around. And now that we're in the seasonally strong fourth quarter, and valuations, I just don't think are that demanding because, NVIDIA is still at 26 times earnings. I mean, I think stocks still have a lot of upside into year end.
All right, really quick. You're talking about
26 times forward, by the way.
Manufacturing, right?
Not
Still in
trailing.
contraction. You're saying the Federal Reserve rate cuts, if we stay on this path, that boosts the manufacturing sector? Is that the point you're trying to get to?
Yes, that's right.
Okay.
So the manufacturing sector has been cautious for 31 months, the longest stretch below 50 in history. And, that's business confidence. It's highly correlated with earnings growth. So I think once that moves above 50, that means we're back in expansion mode, and it's good for financials and small caps, and the tech trade continues. So I think it's a broad-based rally.
I think a lot of people think it would be good for transports, energy prices. I think, as you mentioned, it would have impacts across the board if we see a boost in U.S. manufacturing. Okay, I want to get to your word of the day. It's dovish. Now, this is interesting. Your word's dovish, and you're dovish because the Fed didn't get the jobs report and might not get...
Okay. I can't hear any more dang Fed talk. It's been so much debate around the Fed.
And it's also, a huge moment for the AI industry because, when you get to the right down to it, you need more AI compute. I mean, that's where we are today. Compute is the foundation for all of the intelligence we can get from AI. And, we are a compute provider. We have spent years on our roadmap. We've spent years working with OpenAI and the team. And, together now we're embarking on, a massive build out of 6 gigawatts of AI compute. And it's a big deal for us, for our shareholders, for our teams, and for really, the partnership and the overall AI ecosystem.
Greg, I said at the top, the focus is inference. I think that's really important to be specific about what you will do with this capacity. So literally explain that part. And
I swear, I should just put a camera in front of my house and just have a live feed constantly, just so you can see how ridiculous people drive in my neighborhood. They treat it like it's a racetrack. This guy in a BMW, 20 minutes ago, I was gonna say something that I didn't say it. He was flying around here like it was a flipping flapjack in NASCAR track. This lady in the black G-Wagon, she just goes flying straight across the road, straight to the mailbox, not even thinking about, is there going to be a car coming the other way? Let me just dash across here, straight over the mailbox. Get your freaking G-Wagon out of the way, lady.
I'm conscious that, in the first instance, the first target is 1 gigawatt and then eventually 6 gigawatts. But what will you use it for?
Well, I think that the world continues to...
Oh, man, that's some Final Destination stuff. Now a car comes the other way, and it has 2 massive ladders right on top. Imagine if they went head on. Oh, my goodness. It is Halloween month.
Underestimate the amount of demand for AI compute, right? We've seen this explosion of demand with things like ChatGPT. We're at 800 million weekly active users now. This product didn't even exist 3 years ago.
800 million plus weekly active users. It's an impressive number. I mean, it's just insane. There's not many products in this world that have 800 million plus weekly active users. There's only a few that come to mind. Google search comes to mind. Facebook comes to mind. WhatsApp comes to mind. Instagram comes to mind. YouTube comes to mind. Probably you should own Google in Meta stock. There's not that many products that have 800 million plus weekly active users. That's insane.
And we're in a position where we cannot launch features. We cannot launch new products simply because of lack of computational power. And we see these models continuing to get exponentially better. And I think we're just heading to a world where so much of the economy is going to be lifted up and driven by progress in AI. And so we're very much heading to a world by default that I think looks like a compute desert, right? That there's just not enough compute to go around. And so we're trying to build as much as possible, as quickly as possible. So we're starting with 1 gigawatt simply because you got to start somewhere.
Right.
But honestly, we're building as fast as we possibly can and trying to bring as much computational power to bear for the economy and for the world.
Lisa, this is such a big commitment to Instinct in particular. As a customer, does it make OpenAI the largest for that particular product?
Well, this is certainly the largest deployment that we have announced by far. I mean, 6 gigawatts of compute. As Greg said, we're going to start with the first gigawatt in the second half of deployment that we have announced by far. I mean, 6 gigawatts of compute. As Greg said, we're going to start with the first gigawatt in the second half of 2026 on our new next generation MI450 chip. I think the thing to understand is, these types of partners.
I was trying to see, did she say so far, or am I just hearing things?
To Instinct in particular. As a customer, does it make OpenAI the largest for that particular product?
Well, this is certainly the largest deployment that we have announced by far. I mean, 6 gigawatts of compute. As Greg said,
she says by far. Okay. No, I was interested to hear. Did she say it was important if she said so far or by far? Because if she says so far, then that means maybe they're cooking up something that's even bigger with another company, which I think this is going to be hard to beat, right? Like Meta should be a ridiculously huge customer for AMD. Google should be a ridiculously huge customer for AMD, Microsoft, Amazon, etc., Tesla. But I mean, the big dog of the big dogs, like they got the whale. The whale is OpenAI. There's no debate in that.
To start with the first gigawatt in the second half of 2026 on our new next generation MI450 chip. I think the thing to understand is, these types of partnerships actually take years to really get comfortable with the idea that we're going to go all in together, and this is an all-in partnership in terms of building out the AI compute that OpenAI needs for everything that they're offering to the world. So yes, it's a huge deal, and it also says a lot about how much needs to come together for this entire ecosystem to operate. So we are setting up. Certainly there's a lot of engineering work, but our teams are working together on hardware, software. We're ensuring the supply chain, all of those elements are set up and ready to deliver on this massive commitment.
Now, this is massive, folks. We talk about FOMO, fear of missing out, in regards to stocks in the market, right? In like, people got FOMO for this stock. People probably starting to have FOMO around AMD. Just wait till it goes 300 and then they'll really start to have FOMO. But you got to understand there's also FOMO in a business cycle. And what has happened now between OpenAI and AMD is now creating massive FOMO in the business cycle. What do I mean by that? So now if you're Meta, Google, Microsoft, Amazon, Tesla, smaller players, go down the list. You're looking, you're like, oh my gosh, like OpenAI is going to buy so many AMD chips over the next several years. Are we even going to be able to get allocations to that? So you start trying to fight for your allocations. So the same exact thing that's happened with NVIDIA over the past few years, where everybody's been bowing down to Jensen, like, please, Jensen, give us chips, give us more chips. Now it's all starting to play out with AMD. And this is just a start. So now Meta, Google, go down the whole list of them, right? All the big spenders. They're going to be trying to get as tight as they possibly can with AMD, get their orders in, make sure they're not forgotten in regards to allocations over the next several years, because they're like, crap, OpenAI alone is going to take so much demand of AMD's, supply out there. It's ridiculous. So these are all things to keep in mind.
Greg, talk us through a little bit about the players that you need to also lean on. This has been years in the making, as you say, with AMD, but what other cloud providers are involved? How are you thinking about this working with an Oracle or others out there?
Yeah, we really think of this as an industry-wide effort. And in general, we think that compute is something that does require the entire supply chain to really wake up and to really to start building much more than people were planning on. I think this starts from energy to try to get far more power to be built. Things like nuclear, I think, are going to be very important to come online. The cloud providers are an important part of this as well. So we're going to be deploying AMD in our own data centers. We'll be deploying them together with cloud providers. We have a deal with Oracle, lots of other cloud providers out there. You can really see that we're very much in we just want compute, as much compute as possible. We think this is important for the economy. We think this is important for the nation. We think this is important for humanity. And so really, we're working with everyone in this whole industry in order to get as much compute power online as quickly as we can.
Lisa, I'm sorry, specifics. Where is this data center going to be? Is it one single site? Is it Oracle that will partner with you on this?
Well, actually, what this really is an announcement of what AMD and OpenAI are going to do together. OpenAI has a lot of partners in terms of where they deploy. I imagine a lot of it will be in cloud service providers. It's really up to OpenAI and Greg and Sam and the team. But the way to think about it is for this amount of compute, it's going to have to be in a lot of different places. I mean, it's a massive amount.
Multiple locations.
Multiple locations. Right? I would imagine, multiple providers to really get this online as fast as possible.
Greg, there is a lot of focus on where OpenAI is going to get the money from to fund all of this. Sam Altman's big...
Just wait for the flip. Check back a year from now and watch the flip.
Picture commitment is well documented, right? And the numbers, to his mind, are in the trillions. But have you specifically thought about debt financing for this relationship with AMD? Have you thought about doing a specific equity raise? You are very committed across multiple projects.
Yeah, look,
these are great questions. This is a banger of an interview. Phenomenal question after question.
The way that I would look at this is that AI revenue is growing faster than I think almost any product in history. And that ultimately, at the end of the day, the reason this compute power is so important, is so worthwhile for everyone to build, is because the revenue ultimately will be there. Now, as a company that is trying to move as fast as we can, we look at everything, right? We look at equity, debt, we look at trying to find creative ways of financing all of this. That's been actually a huge focus of us for the past couple of years, is thinking about how can we possibly build the amount of compute that is required in order to really transform this whole economy into an AI-powered economy. And so I think you'll see lots of creative ideas, but fundamentally, I think at the end of the day, it is because we believe that...
I'm sorry to jump in and interrupt, and Caro, just forgive me on this one. The condition of AMD issuing the stock to OpenAI requires you to spend money, basically, because you have to deliver that gigawatt of capacity first. Lisa, I have to ask you if you have assurances that OpenAI is good for it.
Well, let me be clear. I mean, this deal is a win for AMD, it's a win for OpenAI, and it's a win for our shareholders. And that's kind of the way we put this together. I have full confidence in, OpenAI, Sam, Greg, Sarah. I mean, this is a massive opportunity for us. Right now, right here, it's about who has the most compute and how fast can we get it online. And we're committing to doing this together. And the fact is, as OpenAI buys chips, that's great for AMD. Our revenue goes up, our earnings go up. We expect that it will also be very, very accretive to our shareholders from day one. And as we do that, we're very happy to have OpenAI as a deep partner, and we win together. So it's like a virtuous, positive cycle in how we build out, this big vision for having all this compute out there.
Right.
And yet we still question, as you were just talking about, Greg, some of the other supply chain elements. You're talking about the need for nuclear, for power. What's really interesting is are you feeling confident enough about the rest of the compute, the supply chain is there? Is this going to be US manufactured from your perspective, or are you looking at also building out internationally with AMD?
Yeah, we've been looking at really all options. Our preference and really the core thing that we try to do is build as much as possible in the U.S. And you can see the commitments that we've made over the past year, $500 billion of investment in the U.S. And that's not stopping. We're continuing to build. I do think that international, it is also going to be important for the world to have compute. I think that compute is going to become this national security strategic resource, and every country is going to need computational power. And so that we are really not limiting our sort of sites in terms of where to build, but we do think it is important that the U.S. leads in this technology, leads in computational power, and we're expanding the supply chain. But you can see that we've really been working with partners across the globe in order to actually meet the demand that we expect to be coming in upcoming years.
Lisa, the bottom line is when you're a business and you see massive demand coming, you've got to spend. If I'll give you a perfect example of a company that's now one of the biggest companies in the world, and they had a lot of questions they had to face over the past 20 years about their spend. You know what that is? Amazon. So many questions about the e-commerce spend over the years. I'm talking about the last 20 years, right? The AWS spend. I mean, just so many questions about that. But at the end of the day, Amazon thought hey, we got this massive opportunity in e-commerce. We've got this massive opportunity with AWS that we're going to spend on these businesses aggressively. And now you look at AWS, and AWS would be arguably a $1 trillion plus valuation just as a standalone business. And yeah, they spent a fortune of money to get there, but it was worth it, right? And so same thing with the e-commerce side. it ends up being worth it in the end.
Factoring.
As long as you actually execute, right? Not everybody's going to execute. That's where you got to pick the winners and the losers.
Will you look to Intel at all for it, do you think, in the future?
Well, as you know, the supply chain is something that we work on, very meticulously. I think we have a very strong supply chain. We're certainly deeply partnered with, TSMC across the supply chain. Just to that earlier question, we're absolutely prioritizing building in the United States because I think that's super important. This is the U.S. AI stack. We want to have as much of it in the U.S. as possible. And, we continue to really look at, how do we ensure that there will be a strong supply chain, going forward.
Greg, Sam posted on X that this deal with AMD is incremental to what's already being done with NVIDIA. But as Lisa knows, I've spent quite a lot of time looking at the MI family and the newer generations of products to come. Is there a very clear, specific benefit to using AMD technology for inference relative to the capabilities of NVIDIA? Or do you just see it broadly as some sort of diversifying factor?
Well, I would look at it this way, that there's a huge fixed cost to getting AI models running on any platform. And so that when we look at what's out there, that actually getting AI training to work is a huge amount of lift. That's something we've really only done the work for NVIDIA. But for inference, that's something that's much more, that there's a easier barrier to entry there. And one thing we found is that I think that the work that Lisa and team have been doing on the MI450 series, it's looking like it's going to be a really incredible chip. I think that there's the way that these things work is there's niches for different balances of memory and computational power. And so as we have a diversity of workloads, we're finding that having a diversity of chips also really accelerates what we're able to do.
Lisa, at the beginning of this conversation, I said there are both.
He said inference. That's what Lisa Su's been talking about for the last year or two. About she's positioned the company in a great way for inference, and it's exactly what he's talking about. So Lisa Su continues to execute. Would you expect anything different? This stock's a $200+ stock today. When shortly after she took over this company 10 years ago, it was a $2 chuck, $2 a share. Will we expect anything but great execution from her? No.
And financial milestones to be met. And Greg explained you got to start somewhere. So in the first instance, 1 gigawatt. But would you just sort of draw out the pathway to that first gigawatt? It seems like you're prepared to move quickly here.
Yeah, absolutely. And maybe, Ed, if I can just build on something that Greg said. I think he's absolutely right. We're a believer in there's a diversity of workloads, and there will be a diversity of workloads across customers, models, use cases. And from that standpoint, we feel really good about how we're positioned. We love the work here because, frankly, OpenAI is the ultimate power user of our chips and tests us in very good ways. So I think that's what gives us confidence that, the technology is there. And then to your point about milestones, yes, I mean, this is, clearly a case where we are tied to each other. The first gigawatt of deployment is super important. We're going to start that, second